including us.
Right.
20 including us.
20
Are they in?
3 people waiting. Joining soon.
Okay. Well, hello, everybody. Good morning. My name is Khila Khani. I'm here to welcome you to the residential real estate, finding clarity in an unclear market. We're so glad you could join us today. We're going to have a very informative panel discussion on the adaptation of new real estate market best practices, contracts, transactions, and information about remote online notarization. We're going to have 1 hour. It's going to go fast. So I'm going to be as informative as possible. And if you do have any questions, please feel free to put them into the chat bar. We will try to respond to your questions offline. We won't have time to answer them during this seminar, unfortunately. And with that, I'd like to begin by introducing our panelists today. First, we have Jarrod Lowe. Jarrod Lowe is a broker with RE/MAX Ultimate Realty in Southeast Florida, is a proud veteran, thank you very much for your service, by the way, of the U.S. Marine Corps, and a former law enforcement officer in the Orlando area, serving his country and his community for almost 10 years. However, he found his true calling in helping families achieve the American dream of home ownership by becoming a realtor. Jarrod hit the ground running in 2010 and quickly became engaged as a volunteer leader of his local and state Realtors Association, where he first became committed to defending the rights and privileges of his fellow real estate professionals, as well as the community that they serve. Now, over 10 years later, Jarrod is the president of the Broward, Palm Beaches, and St. Lucie Realtors, the third largest local realtor board in the nation. He believes now more than ever in the power of collaboration among realtors and other professionals in the industry, and is truly passionate about helping make decisions that shape our association, the association, and provide the greatest impact and value to its members, as well as the consumers that realtors serve. Next up, we have Miss Cindy Abraham. Sorry. Next, we have Cindy Abraham, half of Keller Williams Realty, 18, yes, Florida, has been practicing real estate for 15 years. She is known for taking care of her clients as if they were her family, hence the nickname Mama. In Hollywood. I'm muted? Oh. Cindy is the Greater Hollywood Chamber of Commerce's Businesswoman of the Year in 2015, was voted Best Realtor in Hollywood 2012, 2013, and 2019. With her partner, Brian Gajewski, the A-Team Florida was awarded Keller Williams Realty Professionals #1 top team in units and #3 top team in volume for 2019. Next, we have Nadia Alcide. Nadia is a mortgage professional and managing partner at Mortgage Biz of Florida. She helps families, individuals, and investors with their real estate goals. She is a natural problem solver who brings a fresh feel to an often complicated or intimidating process. When she isn't taking care of her clients, you can find her automating some form of her life, hanging with family, smiling, or involved in her community and UF alumni network. Welcome. And me, your moderator and panelist, Khila Khani. I'm a native of Florida who earned a BA in history at Cal State University Northridge and my Juris Doctor degree from Nova Southeastern University Shepherd Broad Law Center. I'm licensed to practice law in Florida before the U.S. District Court, Southern District of Florida, and in the state. I focus my practice on real estate law and title insurance. I am a title insurance agent who writes title for Old Republic National Insurance Company, First American Title Insurance Company, and Westport Land Title Insurance Company. Me and my husband, Jay Auerbach, have been partners in Khani and Auerbach and in the same location for over 20 years. I do enjoy the practice of real estate, but I'm also passionate about photography and music. I'm the founder of I Take Great Pics and Rock Cousteau, a music discovery service on YouTube and Spotify. I'm AV rated by Martindale Hubbell, and I take extreme pride in being a resource to both my colleagues and clients, and do too have a passion for making sure that everybody realizes the American dream and gets into a home. So welcome everybody, and thank you for joining us. We're going to start off this panel by asking questions of our panelists. Our first panelist that will be speaking is Cindy Abraham. She is a realtor, as we discussed. Cindy, are you there? Okay.
Let me unmute. I am here.
No, you're good. You're here. Hi, Cindy. Thank you for joining us. I'd like to know how you think that this pandemic has been affecting sales in Broward County. We're going to specify on Broward, although we are going to talk about the Tri-County area. Your specific question is, how is it affecting the sales in Broward County?
And the main thing is that sellers that are occupying their property are a little nervous, so many have temporarily taken them off the market. The buyers are definitely still out there. We have very strict guidelines that change by day. Open houses cannot be done at all except virtually. Showings, people would like to do virtually, but very few people are going to buy something without actually, filling up their senses, going and seeing, touching, feeling the atmosphere. So we can show by appointment only. Only 2 people can enter at a time. So for example, I showed this morning, I went in, I turned on the lights. The agent went in with me. I told her everything that her buyer needed to know. I left, and then she brought her buyer in and then talked to her buyer. So they've slowed, but this is the busiest time of year, April, May, June. So we're expecting when this is over, we're going to get a very big bump.
I think you're probably right about that.
To make up for the time lost.
Of course, yes. So how quickly do you think that the real estate market may recover once we get into this reopen phase? Oh, and let me get you moved over here.
Okay, Nadia is going to be able to answer a little bit more. The one little glitch, of course, is people whose employment status has changed. That's affected several of our buyers. So it's going to be almost like, when you have a hurricane comes through and everything has to kind of start over. It's going to be playing a lot of catch up.
And I see on this slide here that you've provided to us that there's a V. What accounts for that V?
Because this situation was not caused by any kind of crash in the market. This was caused by outside. It's like they said a crash will come through like a tornado, and there's a lot of devastation. This is more like a snowstorm. Once the snow melts, we have to kind of clean things up and move on. So when everything is opened up, people who have not gone to a restaurant for weeks and months and gone out to the casinos and gone to sports events, it's going to be a boom for those types of, and the hiring is going to be amazing. So it's going to be a V. We're going to hit bottom and then we're going to shoot up.
Right.
Once everything opens up.
So that's what accounts for the V, as opposed to 2007, 2008, yeah, when we had that problem created by the lending industry, not necessarily by a pandemic. Okay, very good.
Exactly.
So do you still think it's going to be a seller's market?
That's a good question. I think there might be some deals out there because sellers who have to sell are getting more negotiable, but I think it's going to be a balanced market. A seller's market is when you have more than 6 months inventory, and a buyer's market is when you have less.
Right.
And we're very close to a balanced market. But the same number of sellers are out there, the same number of buyers are out there. It may help balance out the market.
Do you see that we'll have a foreclosure crisis as a result of this? Do you think we'll see it in the same way we saw it in 2008 and 2009?
This is my opinion. I know people very close to me and people I admire a lot believe we are. I cannot see that. Not with as much equity as people have in their homes these days. And I think I gave you another slide about that. It's like, and then if I'm a lender, even the last crisis, if they could work it out with their mortgagees, they don't want to foreclose. They don't want to own the home. they'd be better off, you know, making some kind of arrangements where you tack on the mortgages at the end, whatever, with some late fees. But it is not in a lender's best interest to foreclose if there's any way it can save the loan, especially with interest rates like this.
And so you don't anticipate what we saw back in 2008 and 9 with REOs and stuff like that, and
There will
and
be
short
some.
sales, and
There will
we're
be
gonna
some
try to
more than
avoid that.
now. Yeah,
Okay. And
but not anywhere like that.
and final question for you is, what do you see with respect to the rental market? What do you see with that?
That's another interesting one. And here's what I'm seeing with renters who I've been trying to get to buy. They spend a lot of money on cruises, going out to dinner, going places. That's the one thing we would talk about. I go, cut back a little. You know, you can't save paying your landlord's mortgage in the first place. So cut back. And now they're seeing, oh my gosh, they got to eat at home all the time. There's nowhere to go. They can't believe how much money they're saving, and it's not fun. But yeah, the hair and the nails are coming into play also. But yeah, the renters are calling right now and talking about getting qualified and buying something now that they see that they can live without all these things that are stopping them from having enough money for a down payment.
Okay, so they're you think they're like squirreling away their funds to get ready for the big push.
They're learning that they can save after all.
Well, you keep teaching them. That's the good thing. Very good. All right. Well, thank you for that information, and we'll round back to you in a little bit. Our next speaker is Jarrod Lowe. Jarrod, I'd like to know if you have any, and you're not muted. Very good. Please share some examples with us that you have experienced as a real estate professional since we have been hit with this health crisis.
Sure. The pandemic has actually created an interesting opportunity, I think, for a lot of real estate professionals. One of those things is, you know, those individuals that were quite hesitant to adopt, or should I say adapt, to newer technologies were kind of forced to adapt to some of these technologies, which is actually a good thing, I think, for everyone. What you're also seeing, I think, is that realtors are ensuring that they're being more efficient with their time and with their consumers' times. And what does that mean? Well, you know, there's a lot of people, and I wouldn't even count myself out of this, where, yeah, I've shown prospective buyers. There have been a few that I've probably shown 30 or 40 properties to in the past before we found the right one. Now with technology, we're choosing to be a lot more smart and careful about what we're doing. So maybe instead of scheduling 15, 20, 30 showings, maybe we really scrub that list down. We utilize virtual tours, we utilize photography and other methods of technology to scrub that list down to maybe, you know, 3 to 5 potential properties to go into, which obviously benefits everyone, from the realtor and the consumer, from their time perspective and the efficiency of it, to just minimizing the potential effects of going into so many different individuals' homes, and the potential of potentially spreading, you know, the virus at this point in time. I think you're going to see in the future that these technologies are going to continue to be utilized, and that we can all be a lot more efficient with our time.
I do see that as a benefit as well, that the things are moving in a much more efficient way because we don't have a choice.
Right.
We're forced into efficiency. It's forced efficiency. And
Right.
You can steal that, Jarrod. That's fine. But that's a great answer. What advice would you want to give somebody that wants to put their property on the market right now? And for someone, let's start with someone who wants to sell and put their property on the market. What would you tell them?
Sure. I mean, I would say that it's a great time, and there's a good reason for that. I think you're going to have two interesting perspectives that are going to happen. I think Cindy touched on it as well perfectly, in that you're going to have a lot of pent up demand from buyers that are ready to. You already have buyers that are ready, willing, and able to buy. I think it's going to be an interesting to see. I personally feel that you're probably going to have a lot more individuals coming into Florida, continuing to come into Florida as well, and an even exponential amount of people from New York up north that have been experiencing this pandemic at even greater levels. So we're going to see, I think, an influx of out-of-state buyers coming in, coupled with the pent-up demand from the buyers we have now. So I'm telling the consumer now, the sellers, potential sellers, that it's a good time, because there are those sellers that Cindy mentioned that have decided to take their home temporarily off market, and or maybe have decided not even to list until this is all over. So if we're flooding the market with listings too, there's going to be a lot more competition for those sellers at that time. So they might not get as much value for the home. So I prefer to keep a well-balanced market, and I tell them right now is still a great time to sell.
Fantastic news. What about for someone who wants to buy?
Same thing. I mean, interest rates are pretty much historically low. I'm sure Nadia will probably be touching on that as we go through this, but interest rates are still incredible. As long as you're qualified to buy, you can get a good rate. And it's still, I mean, again, the market, we didn't see the loss of market value of homes. We haven't really seen that. So, I mean, at the end of the day, it's still a stable market. It's still a good time to be in the real estate market, whether you're a buyer or a seller. And that's what I'm telling all the consumers. I think it's still a good time. And we all know real estate is 25% of the national GDP. It's very important to maintain. So I think right now is still a good time to be in the real estate market.
That's fantastic news, Jarrod. Thank you for sharing that. What new trends, services, advisories do you see affecting this new normal for realtors, this new market normal for realtors, for the better? Is it for the better? Is it more challenging? What do you see affecting that for realtors right now?
I mentioned the technology trends. I think we've been trending with technology for many, many, many years. It's going to be unfortunate for the people that just can't adapt to the times, that can't adapt to the technology. You're going to see, and we've already been seeing the trends of historically, real estate, the average age of a realtor is about 53 and a half years old. A lot of realtors it's their second careers. So historically, you've seen more what I like to call the more seasoned professionals in real estate. Over the past 5 to 7 years, we've really seen a trend of younger professionals getting into the real estate game because of technology. So I think the trend you're going to see that start trending upwards even. You may see more seasoned individuals that just can't adapt to the times and or the technologies get out of the business. But that's where we're trending. We're trending more towards, obviously, online, virtual based, the photography, the videos, the things that, I mean, as a society that are trending. It's the same thing in the real estate market. That's what's selling homes, and those trends are going to continue. So I think it's a positive all around, but unfortunately you are going to see some of those individuals that just can't adapt to it, that they're going to fall out of the business. So that's an unfortunate side, but that's part of the real estate game, so to speak.
Well, I think you see that in a lot of areas, not just in real estate as well, but you see that in all areas where people can't necessarily catch up with the technology. And if they can't catch up, then they are unfortunately going to fall behind. It's not what you wish for, but it's a clean out, if you will, and allows the people who are the best professionals in this market to kind of come up to the surface and appear. And that's, in a way, it's a good thing. But again, like you noted, it's not such a great thing for the people left behind. Right. So what new home buyer trends do you anticipate or foresee post-COVID or PC, and the home buyers interested in?
I don't know that we'll see a drastic change from this. And I think even Cindy alluded to it. I mean, everyone, at least most of the economists that I've been following and speaking to, really think that, we're in a health crisis. We're not in an economic crisis. Sure, if this were to extend to a lengthy period of time, we could quickly find ourselves in an economic crisis. And I think it was Cindy's slide that indicated, and I know this from a lot of the economists I spoke with, that a vast majority of all the unemployment claims are individuals in that service industry, individuals in that industry where we all like to go find our favorite watering holes, so to speak. So, as soon as this, as soon as we start opening back up, I think you're going to see those individuals getting right back to work. At what capacity, we don't know for sure. There's too much speculation to that. But I think at the end of the day, you're going to see the majority of a lot of those individuals getting back to work. And I think from a buyer's perspective, it's not going to be much different because we're not finding ourselves in that economic crisis. So the buyers aren't going to be out there expecting to get everything for as little as they can. They still know that we're in a strong and healthy market. And, you know, thankfully enough, we're not in a position like we were in the mid to late 2000s with the predatory lending that really caused the economic crisis, that buyers are already know and are going to continue to know that they really have to qualify to get a home loan, which is a great thing for all of us. So I think overall, I don't see any trends changing drastically outside of, you know, again, my hope, and at least what I've been seeing from myself and from the other agents that are out there still doing business, is that we're all going to be a lot more efficient. We're all going to save a lot of time by utilizing technology, the advancements in technology, to doing a lot more virtual type stuff before we actually set out to go and preview homes in person. So I think that's going to be the biggest change we'll see, is just the efficiency of our own business and the efficiency in which we do business with our consumers.
Very good. Thank you, Jarrod. Thank you very much. Now we are ready to move forward, and we're going to speak to Miss Nadia Alcide. And what I'd like to know, Nadia, is what you think some of the new borrower or lender guidelines are in light of the changes to COVID-19. What are some of these new guidelines that you've seen come out as a result of this health crisis?
So that's a really good question, and that's a pretty much loaded question, because I'll preface this by saying things change day to day, week to week. Initially, when COVID-19 first kicked off and, you know, surprised all of us pretty much, a lot of my lending partners scaled back on the guidelines. The interest rates didn't raise, but the cost to receive certain interest rates did raise as far as the discount point. So right now, as of like today, and thinking about in the now as of this week, yes, guidelines are a little bit tighter. You have to come with certain credit score, and also a certain debt to income ratio. And in my world, that's DTI, so the debt to your income, and understanding, hey, this is a certain percentage it must be under, as long as your credit is at a certain amount. Before, there used to be something called a patch, which would allow us to go above that number. So say the number was 45%, we used to be able to go above the 45% pre-COVID. But now they're really tightening it to make sure the people who are really going for these loans can actually afford them, are ready to keep paying them, and that they're not going to jump into something like forbearance before they make their initial payment.
So they're vetting them a little bit more, Nadia, right? They're vetting them a little bit more.
Yes, and there has been a lot more strict verification of employment guidelines. So even the day of closing, they are calling to make sure that the person is still employed. Even once the file has even been funded, they're still calling to make sure the person is employed. So double checking, triple checking. And luckily, I communicate with my clients and let them know, like, hey, yes, it is a different time, but also understand that if I communicate with you and I'm communicating with my underwriters, then there's no reason for you to feel afraid.
Very good. Very good. So that brings me to my next question about mortgage forbearance. The CARES Act does mention for mortgage forbearance, but can you explain what that's what people want to know. What are the options out there that are available, and what does this mean for the future of that particular loan or whatever? But what do you see with mortgage forbearance and the CARES Act?
So with the CARES Act, for those who may not know, I'll explain a little bit. So the government has allowed for servicers, mortgage servicers, to provide at least 3 months of forbearance, and then more if they request it. And what forbearance is, it's not forgiveness. It's, hey, I can't pay. I'm going to be allowed 3 months to not be able to pay. And then once that 3 months is up, then we can negotiate what happens thereafter. Their intention is not to foreclose on the property as long as the borrower can still pay. Some servicers may want the accelerated payment at month 4, which means the payments that you missed from months 1 through 3. But then others will negotiate and modify the loan or tack the amount that you miss onto the back of the loan. So my suggestion, and what I've been saying to a lot of people, because I have been getting a lot of calls about this, people do assume that forbearance is like a free-for-all and you should just use it even if you do have the money and if you are still working. But my suggestion is to keep paying your mortgage as you would pre-COVID, during COVID, whatever. You still have a job. Pay those bills, because you'll run up into some issues in the future and you just don't want that. It's just like being proactive. You don't want to do that unless you really truly need it. And so for some of my clients who are just kind of, uncertain because every day something's changing or you see something in the media or the news, my suggestion has been, if they have enough equity, because a lot of people do have enough equity in their property to cash out, refinance, they can do that, put the money away so that they have like somewhat of a nest egg, decide that they may not use those funds, and then put it back towards their mortgage once everything settles and regulates. To me, that's a good suggestion for them because, one, it lowers their interest rate, but also they have a little bit of cash on the side so that they don't feel so stressed out about what's to happen potentially.
I agree with you 100%, Nadia. That is the best advice. Avoid forbearance is what I would say. I would agree with you on that. I think we all agree. Avoid mortgage forbearance at all costs if you can. And if you have equity, take it out. Use your home as a piggy bank. Take it out, save the money, and set it aside for an emergency when really things, may get tough for you. So while rates are at historic lows, what does that mean? And I know you've already touched about refinance. What does it mean for a purchase?
So I still have a lot of people coming to purchase, and those people are qualified. Their credit scores are 680 and above. I do have some lending partners that are still not having overlays, and so what the overlays are is like, hey, if you're under 680, we can't help you right now. But I do have some lending partners who are still doing conforming loans, and conforming loans are, your Fannie Mae, Freddie Mac, and then also your government loans as well. But just letting them know that, hey, it could potentially cost you a little bit more than it would have about a month and a half ago out of pocket. But as long as and I'm vetting them, as long as they're ready and they have the funds to be able to do so, then I tell them why not, because the interest rate is so low and they'll end up saving money in the long run.
That's great advice. So how have you been working with your clients during this health crisis? We're all working remotely for the most part, but what have you done with your clients specifically?
So fun fact is I've been working remotely since about 2013. And so remote life, I used to say, was the best life. And so it's been really cool to kind of jump back into working strictly remote. I just check in with my clients more often to make them feel comfortable since they're not seeing me face to face. But at Mortgage Biz, we do have a number of tools where we can do from start to finish the entire mortgage process digitally. So I don't need any wet signing of paperwork or anything like that. Everything can be done from the comfort of somebody's cell phone if they want that to happen, or their computer. And so just keeping them updated as much as possible through this is what's been working out for us. And as I said, we've always had these things in place even before COVID-19. So it kind of just was like an easy transition to keep moving.
I have to say you're lucky, Nadia, because not all of us are able to conduct those signings remotely because the lenders still like to have wet signatures on notes. So you are fortunate, my dear. You are fortunate to live the remote life entirely. I can't say the same for me. So thank you very much, Nadia, for that information. That was extremely helpful. And we're going to move on to our next panelist, me. It's going to be weird asking myself questions, but I'll do my best. I'm going to share some examples with you that I have experienced as a real estate attorney since we were hit with this health crisis. We've had a definite reduction in closings, but it's not as bad as I thought it might have been. It's still not great. We are conducting curbside closings. Instead of having people come into the office and have to, biohazard everything and clean everything down between each client, and also risk having our staff. We have one staff member here in a very closed room, and she's safe right now. But instead of having them inside the conference room, we go outside and we have an umbrella and we have a table and chairs, and in between each closing, we clean down the table and chairs to make sure that they're clean. Although the sun does kill a lot of these viruses once it hits, but we're still taking every precaution that we can. We're also doing remote online notarizations to get some deals completed. We do them for our own deals, and we also are helping our colleagues around the state. The license that we have allows us to conduct these transactions with anybody in the state of Florida, and they don't have to be here in Florida to get these deals completed. Various entities are also the other ways that we've been affected. Yes, various entities throughout the closing process are not necessarily able to carry out the tasks required in a closing at the time and the rate that we're used to. Everything has just kind of changed, but things are still getting done. Sometimes people are unable to get inspections conducted in their buildings, in the condos and stuff like that in the time that they're expecting. You have to make allowances for that. So the next question I have is something that everybody is very concerned about, which is force majeure. How can someone selling their home protect themselves from just having the buyer trying to back out of a deal and claim issues due to the virus? Is coronavirus actually a force majeure event? So let me describe very quickly what force majeure is. It's a common clause in contracts that essentially frees both parties from liability or obligation when an extraordinary event or circumstances beyond the control of the parties, such as war, strike, riot, crime, epidemic, or an event described by the legal term of act of God, hurricane, flood, earthquake, volcanic eruption. They do in fact mention epidemic in this definition. This prevents one or both of the parties from fulfilling their obligations under the contract. In practice, most force majeure clauses do not excuse a party's non-performance entirely, but only suspend it for the time of this force majeure event. This is the definition of force majeure. And while it includes epidemics, you would assume immediately, okay, well, that means that you can get out of the contract then. However, that really hasn't been the case. As everybody knows here on this call, as real estate finance companies and their counterparts are still considered essential services. And for example, my partner and I have not stopped since this came out, since the COVID virus came to town. So if this industry has been considered essential, then you can't necessarily claim that you have a buyer as a buyer or seller, that a contract can be canceled due to force majeure. But arguments can go back and forth on this. I know they do among my colleagues. They still think that that this COVID virus is a force majeure event. We've created addendums. The National Association of Realtors has created the coronavirus addendum, and buyers and sellers can use this addendum. But especially if there's an issue with the closing due to someone losing their job or lack of income. The NAR's creation of this addendum, it's helpful, but it is very buyer friendly. It is not as much seller friendly because it's giving the buyer an easier path to get out. but it has to be filled out correctly regardless in order to get the most out of it. I also want to talk to you briefly about a new concept that everybody has heard about, but some people are unaware of, which is called remote online notarization, or e-notarization. Back in January, the remote online notarization finally was enacted and went into effect and allowed people. You have to get a special license. It's not just your old notary that converts into a remote online notary. There's training. You have to find a platform. In our case, we found a platform called Pavaso, and we've been using it and helping our colleagues around the state. It's an alternative to obtaining a notarized signature on an original document that is available for individuals who are unable to see a notary face-to-face. The face-to-face concept has kind of gone by the wayside for us, and this is what we can do in its place. It's a precaution to help people to help people be safe. And right now you can see on the screen, which shows that there are 5 components to this concept. We have to conduct this in real time with continuous audio and visual feeds. The transaction has to be recorded. Borrower's identity has to be approved using ID software and correctly answering 4 out of 5 background questions. Now, people might be like, what are these they're knowledge-based authentication questions. And people are saying, well, where do they get this information from? How do they know this? If you've ever tried to confirm your identity with a credit card company, they use the same exact process in order to do this for the remote online notary. They gather information that's both public and private data sources that contains things like a borrower's car ownership or home ownership, things of that nature. If the person is not a U.S. citizen, we'd be unable to identify them in the state of Florida. There are places that will allow you to conduct this transaction if you are not a U.S. citizen. But in the state of Florida, you have to be a U.S. citizen and you must have a U.S. cell phone. It's a very strange thing, but this is part of these identity things that need to come out of it. The document then is signed and notarized, and the electronic original is considered tamper evident. That means that it cannot be altered. There's little writing around the signature that you can barely see what it is, but that is what indicates that it has been tamper evident. Then the notary block will state it's notarized remotely, including log entry details, and that the notary, myself, would have to keep that for a minimum of 10 years. Now, I don't particularly keep that information myself. I have the service, the Pavaso online service, that will hold those records for me for 10 years. So if somebody says, oh, I want to do a remote online notary and I want to use Zoom, it seems convenient. I know it seems convenient, but it is not accurate, and it is not a way to get the transaction signed. It's not a way to get the documents processed. Definitely, Ron can reduce the need for people to get powers of attorneys. It gives the borrowers more control. It allows them to stay engaged in the process, even if they're not physically at the closing. It has been a wonderful thing for all of my colleagues, and I'm very proud to be able to provide this service. Moving on to more exciting things. This is like a quick checklist of what would be required when you use the remote online service. You'd have to give them, you as the consumer would get a 6-digit PIN and login credentials. You have to create them for yourself. As I said, they validate the identification. We use a smartphone with a text message that will allow us to capture a copy of your driver's license or government ID that's used to verify your identity. You will have to have a computer or a laptop with a working camera, microphone, and speakers. You have to have the latest version of compatible web browser. We have found that Google Chrome works best with this program. And of course, the most important thing that we all need is strong, uninterrupted internet connections with a minimum of 15 Mbps download upload speed for the optimal experience. I hope that we're not there yet, sorry. So that's what I wanted to share with all of you on remote online notarization. And I will spend a few seconds on advice that you can give someone who wants to put their property on the market in Florida, and or for someone who wants to buy property in South Florida. And I'll open it up shortly to my other speakers as well. It isn't necessarily a bad time, I think, to put your property in the market, as Jarrod spoke to that as well. But if it's a condo or a building that requires permission to enter, you have to take caution. Planning is very much required, and knowing the condo requirements that have been put in place during this time is essential to understanding what you can and cannot do to transact that property. A single family home or a townhome, that can be conducted also while maintaining social distancing requirements. I said in the last discussion, and Jarrod will laugh, that unless it's a cash buyer, stay away. I have changed my opinion on that. No, I don't think it's, while a cash is always, cash is preferred. There are viable finance transactions out there, as Nadia explained, as Jarrod explained. It can happen. And you just have to use caution, and be very careful about reading that contract or having someone advise you about that contract. The borrowers are also facing many challenges, as you know, income, job security. So using the COVID-19 addendum may be essential to the health of the transaction. You could go a few weeks with a signed contract that includes financing and then be left holding the bag, so to speak, when the lender pulls out of the transaction at the last minute. Buyers, you'll be faced with the same challenges. Plus, lenders are not capable of permitting, as I mentioned before, they're not capable of permitting borrowers to sign a note via remote online notary. So they would have to conduct this face-to-face closing. And lenders would also have to want information in order to collect the data they need for underwriting, and some information may not necessarily be available. I'm going to go very quickly and talk about condo associations and how they're affecting sales, and what you can do to protect yourself from the transaction falling apart. In the last meeting I was at, I had a question: what can condo associations, are they allowed to limit access for real estate transactions? Are they allowed not to permit access at all? They are allowed to make reasonable rules in order to protect the public health. That is what they are permitted to do. They have the right to enact these reasonable requirements, and it is not considered illegal. People are concerned also about obtaining interviews and approvals. If a request has been made and the association fails to respond and they have requirements to respond in a certain period of time, the approval is going to be assumed. So each condo association has its own rules, and everything has to be approached on a case-by-case basis. And now I'd like to open it up to my other speakers and ask a question of each of them. So, is it a good time to buy or sell in real estate? And I'm going to start with Jarrod. Jarrod, is it a good time to buy or sell in Florida? And I think you answered it, but answer it.
I did. Yes, it is. And I think you hit the nail on the head. But you need to be an informed buyer or seller. So you need to have realistic expectations. You need to know, like you mentioned, if you're a seller, if there are impeding restrictions, specifically if you're within a homeowners or condo association, which brings me to my next and probably most important point. That's why it's important now, just as much as it has been ever, to have an experienced professional on your side, a realtor, representing you, whether it be on the buying or selling side, looking out for your best interest, that subject matter expert that can help guide you throughout that process. So absolutely, it's a great time, and make sure you find yourself a good realtor to help you with the process.
Great answer, Jarrod. Cindy, what do you think? Is it a good time to buy or sell in South Florida? You're on mute, don't forget.
Unmute, there we go. It's always a good time when it's the right time for the person. The days of, with buyers, the days of, oh, I'd like to see a few properties, oh, hop in the car, those are over. Like, we're definitely doing video consultations. And we've done it for a very long time. So I don't think we've ever shown that many properties. We We very much narrow it down, especially if it's a husband and wife wants and needs, and we only pick a few, the ones that fit. And many times we don't have one yet, so we have to do the automatic notification. But the time, it's very personal. The time is right when you want to move, when you want to buy a home, when you want to be happy where you live. You're not happy where you live, that's the worst. So this gives us all a new perspective. Who said health crisis that described this? Was that you, Jarrod? I love that. And I also love physical distancing. We're not socially distant. We're still finding ways. We do have technology. And with your permission, I just want to read my absolute favorite quote about this. And this applies to real estate also. I know this, when this ends, and it will, every game will sell out. Every restaurant will have a 2-hour wait. Every kid will be glad to be in school. Everyone will love their job. The stock market will skyrocket. Every other house will be toilet papered. I love it. And we will all embrace and shake hands. It's going to be a pretty good day. So hang in there, world.
That's a very positive statement. Thank you, Cindy, for
You're
that.
welcome.
I appreciate it. So Nadia, what do you have to say about, is it a good time to buy or sell in South Florida? Well, let's talk about the buy, because you're the buy lady.
So obviously that's dependent on the person's financial picture and profile. And so I would say yes, as long as they are ready and they're ready to be vetted and they have their financial house in order, then yeah, it is a good time for them to buy. Rates are really low. And as long as you work with a professional that's willing to navigate any overlays or any changes as they come along with you, then yeah, it's a really good time to buy.
Well, I would agree. I'd say it's a great time to buy or sell, as long as we all know the limitations. Planning is so important now more than ever. And if you're a seller, I'm not going to say it because Jarrod will get mad, but find that cash buyer. But of course, every buyer that has qualified, that can get a loan, is a great buyer. It's always a good time to buy in South Florida, it's my opinion. And when it's over, just like Jarrod and all the other experts that I've been hearing over the past few months, they're all going to come here to South Florida. They're all going to want to live here. Everybody from the Northeast and all these other places, they're all going to come here. Florida still is a great place to live, and you can do it. You can do it. The crowd overflow is going to make its way here. Before I go to final thoughts, I'll try to see what's going on in the chat, if there are any questions. I don't have it. Does anybody have a question that they'd like to put in the chat? We've got 10 minutes and I can probably see if I can answer someone's question. Does anybody have a question? No questions? Okay, you're welcome, Alicia. And I'm getting comments, good information, informative. Is it better to show a place as staged or empty? That comes from Michael Killeen to everybody. Sorry? Okay, Cindy, is it better to show a place as staged or empty? You're on mute.
Oh, there we go. Okay.
Perfect.
Honestly, just from what I've seen, and Brian is really the buyer specialist, but I do a lot of the showings, and staged helps a great deal. And even if you already have furniture, just to have someone come in and like jazz it up. People are funny. They'll fall in love with the place because of the decor sometimes. And staging, I think, is really important.
I would have to agree.
You get more money. Let's put it that way. You're going to get more money for your property if you want to invest it, and you get your money back.
Very good. Very good. Do either of my speakers, do you have anything that I may have missed that you wanted to add? Oh, Nadia, please share. You're on mute. Oh.
You have to unmute her.
There you go. We're good. Sorry about that.
I'm unmuted. So something I didn't talk about from one of the guidelines I just missed So we also still have to do appraisals, right, during all of this. And typically appraisals go inside of the house and do the outside assessment. But there has been some guideline changes and some ease of guidelines where they're allowing people to do exterior only or sometimes desktop, but it does depend on the loan that the borrower is going for. And obviously we would talk to them based on what that is and let them know, hey, it's going to be an exterior only, et cetera, or just the traditional one, as long as the seller is allowing the appraiser to come in and assess the property. So yeah, that's another one of the changes that has been happening during this.
That's great. I'm glad you mentioned the appraisals because that is a component of the process. And
Yes.
if you, I don't know if you noticed, but we had this set up where you're going to see the realtor first in this process. So we had Jarrod and Cindy speak first. And then you're going to see Nadia, because that's where you're going to get your money from to buy the house. Then you're going to see Nadia. And then you see your closer, Khani Auerbach, closing agent, to help you close that transaction. That is why we set it up the way we did. So you can understand the process is still working. The process is still going on. We're still doing what we used to do, just in a different way. I do have a question from, no, somebody asked about appraisals. I think we answered that.
Well, I want to let her know, like, just to say that it depends on the guideline. So some, yes, you have to do the traditional appraisal. Some
Okay.
will allow the exterior, but it has to meet a certain guideline. And that guideline is different based on what the loan product is.
Okay. Does anybody have a question, have a way to answer one of my panelists on how the international market is doing? Does anybody want to speak to that? I don't really have any knowledge of that. Does anybody? Nope. Okay. How about advice? Someone asked if we have any advice about advising new sellers or potential sellers when it comes to showing the properties. Are physical showings being completely replaced by virtual, or is this you just stick with the physical ones? Cindy, you got that?
Yeah.
No, she muted herself.
Oh, you muted yourself, dear. And now you're good.
Virtual showings have been used for quite a while. You know, we have them in the listings, et cetera. But honestly, I have not run into anybody who is willing to buy a property without getting inside the property and seeing it for themselves. But it is a great starting point. Now, maybe with the international market, because we have sold property sight unseen to international buyers, but we have to be very, very careful to make sure they see everything. They cannot be surprised when they get here and say, oh my goodness, I didn't know it was this small, etc. So it's a slippery slope sometimes.
Jarrod, do you have some comments about the international market you'd like to share with us?
Sure. I mean, first of all, speaking to Cindy's, surprisingly enough, I've actually had two out of state, not international buyers purchase sight unseen in the last 2 weeks. But I mean, I've based a lot of my business on a specific niche over the years that have allowed me to do that. And maybe I'm just in a different marketplace generally where I do my business as well. As far as international, I mean, you know, South Florida is one of the global epicenters of, or one of the epicenters of global real estate, I should say. So, I mean, at the end of the day, right now, obviously, with everything going on, sure, has it slowed down tremendously? Absolutely. But just like I said, with, you know, your out of state, your Northeastern buyers coming back into the marketplace as soon as we get back to business and back to work, I think you're going to see the exact same thing happening. I think, it goes back to, this is, I hate to use that cliche of the unprecedented times, but these are times that no one's experienced. So being forced to stay in their homes and not be able to go out and do what they want to do, I think whether it be impulsively doing it or it be just the final straw to a lot of people, they really probably are going to want to achieve that dream that they've had for so many years to get down to to sunny South Florida and live their lives in paradise. So you're going to see a lot of people from every different level getting back in the real estate game and in the real estate market. So hold on for that, because it's happening.
Excellent. Excellent.
Cindy.
Okay, Cindy, you have something you want to add?
You know that the humor during this thing has been incredible, but one of the ones was, are you in the home that you're the most happy being quarantined in? So if you're not happy being quarantined where you are, you probably aren't happy where you live. So you might want to think about it. That was one of the selling points that the realtors were supposedly using. Can you see yourself being quarantined in this home? So yeah, be happy.
That's great. That's great advice. Well, I wanted to just say to everybody, this has been an amazing experience so far. And before we head out, if you have a quick question, you can try to put it on there. I'll try to get to it. But I wanted to say, yes, Jarrod, please go ahead. Oh, I have to unmute you. Okay. Go ahead.
If I could say just a few quick things real quick. One of the biggest things as a leader, and I read a lot of leadership type books, but I'm big in general, and it stems from my military experience and my background, as well as my leadership experience within real estate. But I'm a big person on mindset and mentality. And I think, our mentality and our mindset, our outlook on life, our outlook on our circumstances, or our current plight or experiences has a lot to do with how we come out of situations. And I think now more than ever, it's important to really look and focus on our own mindset and mentalities. And one of my good friends here recently, a couple weeks ago, reminded me of the buffalo and cow mentality. And I don't know if anyone heard it, maybe not, and a
No.
quick reference to it real quick. But the difference between how a cow compared to how a buffalo handles a storm or a stressful situation. I think a lot of us as human beings tend to handle it in the ostrich approach, where we like to just bury our heads down in the ground. But when cows encounter an impending storm, they will turn to each other and they will run away from it. Cows don't run very fast. So obviously they'll quickly become exhausted, they'll become in pain, and that prolongs their exposure to the storm that they're weathering. What do buffaloes do? Buffaloes turn around, look at each other, and they charge into the storm, and they get through it together. And that is so very important when it comes to just mindset of our own, facing our problems and our storms, whether they're personal or they're global like they are now, head on. But what was the key to what I said is buffaloes herd closely together, charge through it together. And all of us working together and having that positive mindset and expectation, I think at the end of the day will bring us out on the other side, where the grass is definitely going to be greener, and we're going to have a lot more opportunity coming out of this. So I know that's probably all sounds a little cliche, but I'm very big on mindset. And I think during these times, it's important for some people to know, because they haven't experienced a lot of these types. Well, none of us have really experienced this, but it's easy to be depressed, disappointed, or upset when going through challenging times. But it's important now more than ever to really work together and have that buffalo mindset.
I think that expression of mindset is fantastic, and it's everything all of us need to hear. And I thank you, Jarrod, for that. We have a question from someone real quick. Let me see if I can get that. I don't know if I'm going to be able to get that right now. Yeah, I apologize, Lana, you're asking a question, but I'm not able, because we are kind of finished with the program right now. I have one more final thought I want to share with everybody before we go. In the end, the answer is never bet against America. Now, I can't ask you all who said that and quiz you, so I'll tell you who said that. Warren Buffett just said that at his shareholder meeting the other day. So in the end, the answer is never bet against America, and I certainly won't. I want to thank all of you for coming here today and sharing your knowledge and expressing your professionalism to this group. And I want And I want to thank the panelists very much for their time, their energy. We're all so busy, and I can't thank you enough for sharing your time, your very valuable time with us today. Thank you so much to everybody that's been on this panel. And again, here you can see, you can connect with our panelists. If a question that you have wasn't answered, feel free to contact one of us and we'll be happy to assist you. And until then, be well, everybody, stay safe, and take care.